All right, people. Uh, we're starting today. We are going to be looking at the market. Welcome to the channel. It's Nikki. It's been quite some time since we did this. I hope the voice is clear. Please, if you're in this live, clarify the voice is clear. If you're having issues, you could just drop right in the comment and tell me it's not clear enough. So I'll assume in this case it is clear. I'll assume it's clear. So in this live stream, we're going to be talking about, the live charts. Today, we're going to be looking at charts. The market just opened. It's a weekly market analysis with me, Chuksniki. And my last video was about the Euro US dollar, where I had a trade that, you know, dived right into profit, like within one huge 1 hour candle. That was thanks to the news and already preset trade. It happens very fast before I even came into the chart to check back on it. So today we are diving into the market. Sorry, I think I'm having issues. I think my network went off something. Just hold on. All right, so I think the network is back. I think we have a better network now. So there was a network health issue, I think. I think I need to end the stream and restart it probably. But okay, I think it's live now. It's okay. We're very okay. Let's see. I'm still having the error message. We're still having the error message. But let's just see how it goes. So let's take a good look at the markets first and foremost. But before we dive into the market, right, we need to understand what is really happening in the economy as of recent. So this is currently this is a self-made Excel where I do measurements news that came out and against the expectation we had. So we're measuring the previous against the current news and then the current expectation we had against the previous, and then we're checking how far away from expectations are we and how good is it in general. So all of these are all, though I didn't write percentage with them, but they're all scores based on different news for different currency assets. And every week I have to manually, or rather every day, I have to manually pick up all the news and drop it in here. As you can see, this has been since January 1st, or January 2nd rather. It's a lot of information. Over how many thousand rows? It's like 4,000, 5,000 rows of information. It's lagging behind. I think my network is quite bad. I hope it's not. Yeah, I hope it's not damaging the entire. If you have anything, like maybe you're having issues at your end, you can type in the chat and I will check it out and see if I can do something better about it. Maybe end the trade, end the chat, and so. All right, so I definitely need another screen, but all right. So I hope this is like right on spawn, right on spot. So I really hope this is better than the previous one. I'm still seeing the error message. But let's keep our fingers crossed and hope it goes all good. So, like I said, this whole thing you see here is a bunch of news. Matter of fact, every news that I can find on currency pairs that has been released on investing.com on the economic calendar since January. I'm going to quickly open this in Excel. This way it will be easier and faster. We don't have to go through network lags to see it in Excel. While we're doing that, we can open up my broker, and if it requires me to log in, let's log in and start this shooting. All right, so like I said, over here we have, you can see all the way from January, all the way from January 1st till date, which is 4th. That was on Friday, the last news release. So what I do here is I grade each news. So as each news comes in, the calculator does its stuff and picks up only the latest news for that particular situation. So for example, the GDP for Australian dollar, we witnessed a drop in uh, the actual value compared to expectation, and also that drop also reflected a drop between previous and the current value. So if I want to dive into that particular situation here, let's unhide the GDP quotes. So on the GDP quotes, you can look right here. You see the Australian dollar. The last news was on the 4th of this month, which was on Friday. So the GDP for the first quarter, and you can see the the previous was at 0.6. The forecast was for it to drop to about, the growth rate drop was expected to drop to 0.4, but it ended up dropping way below the zero point 0.4 to 0.2. So that's like, beyond, you know, way below expectation, and even way below what it even was prior. So it could be below expectation but not be below what it was. But in this case, it didn't quite meet up. So you can see that reflecting here as 25% score. The inflation data is actually quite good and all that stuff. So when I put in all of this for each currency, including COT data, right? Including the COT data. So we can see the commercial traders are buying in. Okay, so let's check if there's a new chart. We don't have any new chart. All right, it's all cool. It's all cool. So the COT data is saying they are actually, they're buying into the change. The way I did this formula here, this formula is coming from here. So let's look at the Australian dollar and the COT data. So we see the COT data, we see that there are a lot more buy contracts than selling contracts. A lot more long contracts than short contracts for the Australian dollar. And that is like 78% of the entire orders from commercial traders is on the long side. It's on the bullish side. So therefore, it's a bullish market. Like, it's bullish. Now, also, I calculate not just what they have now, but also calculate the change they made between now and the last release. So on the last release, we realized that it seems that they either took out a lot more short orders or they added a lot more buying orders, because they are going even more bullish compared to last week in this market. Now, for the retail traders, the small traders, so we always look at the commercial traders and we check it against the retail traders, and that way we know who, and contrarian signals. We want to know if the retail traders are going bearish. We want to go against the retail traders. As you all know, the retail traders are mostly 80% of the time they're on the wrong side of the market. So you'll be watching out for when they are now, completely away from what the commercial traders are trading, and then you take side with the commercial traders if you find that opportunity on your chart based on your strategy to head for profit. So in this case, the Australian dollar, you can see the small traders are actually neutral in terms of their current trade. But if you look at the change they made in the last week, they actually changed bearish perspective. So they might have been bullish last week and then they reduced their bullish uh, trades, hence making them bearish in terms of like their change in perspective. So they're going the opposite direction. Now, all of this happens for each and every currency the same way, all the way down here. So this is the COT data you see here, and then their change in bias. Same thing with the retail traders, their expectation, their current stance, and then their bias change. So what I do with all of this basically is I want to know what is the weighted base, the weighted grounds for the base trade, the base market, like the base currency. For example, this is New Zealand dollar against Swiss franc. The base currency here is the New Zealand dollar, and then the quote is the Swiss franc. So in this case, what we're looking out for is on the base currency, how good is the entire scenario of the economy. So without the COT data now, we're going to carry a weighted calculation. So it's going to be the central bank rates, the gross domestic product, that's GDP, the inflation on unemployment rate, the retail sales, the manufacturing PMI, service PMI, employment change, which is also non-farm payroll in the US, and the PPI. And then we do a weighted calculations, and with that weighted calculation, we know okay, this particular market is is strong, is neutral, is weak. Now you can see of everything here, we can see only the New Zealand dollar is printing a very clear, strong show. It's printing a clear, strong economy, while the rest are neutral. Now, because the rest are neutral doesn't mean you can't trade them. Because the good thing is this: so even though it is neutral, by the time you start to pair them against each other, one is always going to definitely be stronger than the other, which is basically what trading is. We're trading the stronger economy, and we're selling the weaker economy to hope that it maintains that stance for a while we trade it till we get profits, work out of the market before any changes occur. Just checking if we have any charts. Okay, so there are no new charts. Everything is still going smoothly. All right. So with that in mind, we're going to go largest to smallest on the weighted average, and it means these currencies here are currencies where this currency pairs here are pairs where I should take note of bullish chances. It's not as if you should just go in and go buy, right? These are the currencies you should take note. If you find a bullish chance, you should go long. You should most likely go long, especially if you find a very good bullish chance. But I just don't dive into it, right? Because I want to see the retail stance and the retail stand as well as the commercial stand. Now, looking at all of that, I can see that the commercial traders are leaning more into a bullish perspective in this kind of market. So it seems if I should look at the COT data here, I would see that on the US side they had like strong bulls, and then on the New Zealand they are quite neutral. So I'm getting a bullish reading here, telling me the quote is quite bullish. You can see it. This is the quote currency, which is the US dollar, is strongly bullish, while the base currency on the COT data, commercial, they are actually not so bullish. So I'm going to be looking at the bias stance of the commercial traders. Now, the commercial traders, you can see, apart from the rest three here, only this one is in line, like it's properly in line with this current economic situation. So currently, this is bullish in terms of reading, though it's telling me neutral, but it's going towards the bullish area. And then the COT data is bullish on it. Now I can see the retail traders are bearish on it. This is like a perfect contrarian situation. Situations like this are where I then go into the chart and we start looking for New Zealand dollar against Japanese yen, and we start looking for possible buying scenarios, areas we can join in this market for buying opportunities. So right here you can see I actually have a buy limit trade already placed right here at zero point 0.3 lots. So I'm hoping for price to come within into this zone. You can see this strong push up by the market, this long candle. This candle is not a candle that is caused by you and I, retail traders. It's caused by mostly institutions and news. You know, news, geopolitical, or rather local news. Strong news, strong happenings. Either that or you know big investors, hedge funds, and the rest. And then rarely is it retail traders. Hardly once in every. It's like 0.1 in every 10 happenings is it caused by retail traders. So all I see here is a reason to buy. Why? Because on those 4 hours right now, this to me is a clear demand zone. This to me is a clear demand zone on the 4 hours. And I am hoping for price to come into this zone, come into this zone and start to push away from it, especially because it is backed by, especially because it is backed by the fundamental situation of both economy right now. You can see it right here. It is seriously backed by it. Even the COT data is in line, and the retail trade is in line. In that case, I am looking to, you know, go long here. Now, apart from using the fundamental bias, I love to use the fundamental bias specifically to first pick my most my most adorable trades. These are trades that I see as most likely to happen. Then I go into the chart and just do normal technical analysis on all as many charts as possible to say, okay, on terms of technical stance, what is also most likely going to happen in this mix. So going straight from here all the way to the reds, I'm not going to bother about all of this. I'm going to dive straight into the reds because everything in between tells me the economy is not so far away from each other and you shouldn't be looking too much into it. So I'm going down into the red zones. Now, in the red zones, I'm looking for where the COT data, the commercial traders are in line with the move. So, for example, you can see right here, this very last one, we have we have it going towards the red angle by the commercial traders, and we have the retail traders neutral on stance. But the economy are both, see the economy, the British pounds is not dealing so well against the New Zealand dollar. Hence, we should be aiming to purchase the New Zealand dollar in this case. So let's check out the New Zealand dollar on the chart and see what we can do. The British pound against NZD. So GBP NZD. I'm having serious network problems, but I hope it doesn't tarnish this entire live stream. All right, so in this case, I have a very clean chart, and not just a clean chart, a chart that just landed me right in position of possibly something could be happening here. And looking at this right now, all I can say is I'm currently at a place where I personally feel shorting is very good. But I wouldn't just dive into these markets because this is clearly, let me make it all big. This is clearly a 4 hour supply zone. And I could trade for that market to come down here to this 4 hour. But instead of just, trading this small bits, I want to start all the way from the weekly, see what the market is doing, see the best possible areas market may likely be heading towards, and then take trades based on that. I'm looking at this long move from here, and that's going to be a monthly thing. It's going to be a monthly order flow. So let's just go up to the monthly and start all the way from the month down to the 4 hours, 2 hours, and 1 hour, where we would then finalize on if to take a trade or not. So all I see here is good higher highs, higher lows, higher highs, higher lows. For those of you who haven't seen it, this is what I see. So this is what the market has done basically. gone up, 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 and pushing real good. So taking this whole range is going to be like a huge move. Now, even if I want to take this whole range, I can't take it because this is the last place I found a good monthly demand zone. Monthly view. This is where I want to be looking at. And why will I say that? If you take note of what I drew just now, let me draw it again. You realize market break of structure happened right here, which is this is where the clear break of structure on the monthly occurred. And if the break of structure occurred here, around here, obviously we'll find zones, right? So for us to take this demand zone, this monthly demand zone, as what price is heading to, we need price to start closing below these lows that's been printed. So that's on this particular time frame, right? If price starts to close below these lows, then we have like good reasons to short this market. But this is a monthly time frame, and it is a lot of a lot of move. So we head into the weekly. Now we know that we are heading in a bullish direction. You can now see the clear higher lows, higher high, higher lows, higher high. You can see it right here. Now on the monthly, we are still not getting very good candle closes. We haven't gotten candle closes. So therefore, it seems like that 4 hours view is the best view we have right now. So let's go into the daily, see if we can get reasons to say, okay, we should be shorting this market. All right, so now you can see what I was saying about waiting to check the higher time frame. As good as this 4 hour zone we picked up, you can see on the daily that we have another demand zone, another supply zone right above, and a demand zone right below. So this is the looking at higher time frame contest. You have to always keep account of the higher time frame. It is by far way more important than any other thing you want to trade. So therefore, to me, as of now, change of plans, I will no longer be looking at that area as useful. Matter of fact, my retracement has now become between these two area. Hence, I'm looking for confluence now. I'm looking for confluence within the areas I have zones already showing itself. So yes, this is a very, very beautiful zone to short from. Yes, it is. However, I'm looking to see if there are other zones above. So there's no other confluence zone here apart from these 4 hours. So if I want to short from those 4 hours, I won't just want to short from those 4 hours, because down here I can see a clear confluence for the demand zone on the 4 hours. So I won't just take up and start shorting here. Instead, I will go to the 1 hour and wait for price to respond. Basically, I want price to respond properly. I want to see price print that change of structure on a lower time frame before I can now dive into this market and say selling. So basically, what I'm doing here is I am simply waiting for price to start. Oof, this HMRO period. I'm simply waiting for price to start, dive into this 1 hour zone. This is the 1 hour um, supply zone. So waiting for price to dive into this 1 hour zone, which is already in within it. It's just the spread of my broker that's killing me right now. And then I want to start seeing price break below the zone. So when price starts to break below the zone, I can then take a trade aiming from here all the way down here. Now, once that starts to happen, I can then know I have a safer trade where I can place this stop loss somewhere around the area to trade. So automatically we have two trades just from looking at economic data. Now, before I move into the further angles where we just start to analyze every other trade I have in mind already set prior to today, I want to check if we have any questions on the chat group. Okay, so I don't have any questions yet on the chat group, and I really hope this isn't lagging badly. I really hope this isn't lagging badly. Oh, they are just both terrible. They are both very terrible. They are both terrible. Well, I think we just have to bear with this for now. Let's see how it goes. All right, let's head into other things that matter, like other things that matter. Other plans I have. So currently, as it is right now, I have 8 other markets. Add this one to my watch list because this is like a very good market to put in the watch list. So this and the New Zealand dollar, Japanese yen. So these two, they are just 40 pip spread. Like crazy spread I see on XNS broker sometimes is absolutely alarming. Like it's enough to make somebody go crazy. 40 pips away. That's enough to cancel out so many weekend orders, overnight orders, and all that stuff. But well, by morning you come back here and you'll be seeing about spread, and it look like nothing happened in the next couple of hours when it's opening market, so it's expected. All right, let's look at the rest trades I have. Why do I have so many trades on the table? It's quite simple. We're going to analyze them one after the other and in a very quick manner, so we can all go to bed. So currently I have this trade right here, and without even explaining much, you can clearly see the reason why this trade is here. So you can see the 4 hour break of structure, break of structure, break of structure. So seeing price return to this level, especially with such a slow momentum, it gives me a good and comfortable feeling that yes, this trade can actually fall through. This is the analysis for this situation. So the analysis remains the same. There is a, I think I have all of that hidden. Man, this is so bad. I can't do any miracles on this. By the way, let me just show you myself. So what we have here is we have zones around here. Oh, it came up. Thank God. So we have confluence here, like major confluence in this place. We have a major confluence, and you can see I labeled it DAX PY. It's actually partially what Dax teaches on his channel, and also if a sweet view that this place right here we have a demand zone on the lower time frame. So currently right in a demand zone already. This last candle right here, this one right here, it's clearly a demand zone. It's mitigated, mitigated, but we're just looking to see what price is going to do with the lower time frame demand zones. When price hits those lower, it to erupt and run. That is the whole plan for the euro US dollar. For the British pound US dollar, we're in similar situations, but unlike the other one, we do not have a Quasimodo reversal. We just have a normal supply zone up there, and we're hoping for price to respond to that supply zone. See it right here. Oh, that's not what I planned. You can see it right here. You can see the confluence of zones I have right here. So I placed my trade between the confluences, and I'm allowing price, I could even go into the 4 hours and trade towards this other trade, like go into lower time frame, look for obvious demand zones, and hope price comes towards the demand first before it goes for the supply. So if price is pushing itself towards the demand zone, I could I could slowly just place a buy order, buying these markets and pushing it towards the supply zones. So let's see how it goes on the 1 hour. Man, I'm having very terrible network. So on the one, I do not have like clear zones. I think this was an error or something. I do not have any clear zone to buy off. You can see the only clear zone that was here has already been hit by price, which is this one right here. So price has already mitigated it right here with this candle. Back into this zone is going to not, no, it's not good or good for you to even follow. So I don't even want to take a second guess. Hence, I'll clean up this thing here And even if I wanted to just dive into the trade, I need to take account of how far away it is. And you can see it's already too close to the equilibrium. If it was down here, maybe we could have, entered the trade too, but it's way too close to equilibrium. That would be a one-to-one risk trade, and that's extremely risky. One to one. For the US dollar, Japanese yen, I think we're shorting this currency probably. Are we? Okay, we're buying this currency. Yeah, yep. So this is similar to um, the euro US dollar, just flipped upside down, right? Just flipped upside down. You can see the clear zones here, 4 hour zone, the 4 hour zone. But when I go up to the daily, I can see that there's no daily zone here except for this one. This would have been a very good daily zone. Matter of fact, there is a daily zone right here. You can see this right here. This is a daily supply zone. So this is the good thing with looking at the charts over and over again. You'd be surprised that you notice something. Then another thing you need to also observe is this was also a daily supply zone, but price is still right. Price is still respecting the high for that zone. Price hasn't closed above this, so we're hoping for price to, you know, come down to this zone, pick up enough momentum, and then close above it. That is what we're hoping for. But then again, looking at this market right now, there is a tendency this may not play out in this manner. But if you go down to the lower time frame to look at, momentum and everything, you can see clearly now that on the 4 hours, market has closed above, and it's taking a long time to find its way back here. So by the time it finds its way back here, I feel there will still be enough, buying power for the US dollar against the Japanese yen for us to push price, you know, back to the upside towards the 4 hours and the daily zone, which is what my trade is standing for right here. The next currency we have on this table is the Australian dollar, New Zealand dollar. Now, this is like one heck of a long term trade. Trust me, this is one long term trade that even I, to an extent, I don't even have much faith in it. But looking at this right now, I think faith has started. I'm likely going to be trading this market bearish also to go towards zone. But like I said, these are long time frame trades, right? These are trades that are actually on the higher time frame. Why am I saying I can actually do clear zone, a clear demand zone while doing that? If it doesn't do that, then this trade is not so right. Looking at the daily is not a viable trade. But if you know, put yourself down into the 4 hours. Ah, man, terrible network. Very terrible network. I really wish I had better. So if you put yourself into the 4 hours and you look at those same levels, finally closing below them. So if we draw this Fibonacci retracement all the way from the high to the low, we are still way into a very good premium zone. But we are not printing, you know, clear show that price is ready to go to is print this zone here on the 4 hours, which is not credible enough. It's not credible enough because remember we have this major low to take out, and I need price to clear move below and then sluggish move back up to whatever zone it creates. Then I'll say, okay, let's take this market with clear moves to the downside. But up until I start seeing such moves, and I don't trust it one bit. You can see this market already mitigated this zone and has pushed away from it. Let's go into the 1 hour where you see that happen. You can see it right here. These two candles. There was a clear mitigation and push away from it. But ever since then, price has started, you know, sinking for lower zones, lower zones, lower zones. So currently we have this zone on the 4 hours, and we also have this zone on the 1 hour for this place. Let's hope these two things work. Price push properly well down and starts to come back up, and then we can then take perfect actions to short this market for profits. Until then, I'm still standing with my bullish stance. I think I've analyzed a lot of things here, and man, it's quite late. I need to go rest. We need to go get ready for work tomorrow, prepare ourselves to go to the office. So I hope you learned something here with demand and supply, learned a little bit of, even if it's just small, very small things about about the supply and demand strategy, seeing it work well, and then placing trades based on that, overview. But whatever it is, however it is, I'll say thank you all for watching and wish you all better days ahead. Peace.